Okay, so we've got a lot of people on the call, as well as we're going to be publishing this recording as well later. So I'm super excited. So most of you are that are on the call are our current clients, and some of you I've not personally met. So my name is Brent Saunier, and I'm the co-founder and CEO of Profi 2020 Dental CPAs. And along with my business partner, Chris Sands, who's joining us. There's a lot of things that have been happening, and I reached out to Paul Edwards, who I'm super excited to have. He is the CEO of CEDR HR, which I know some of you are already clients of his. So Paul has agreed to join us and provide some of the feedback on the HR issues that everybody is asking related to maybe COVID sick pay and anything HR. So I'm going to take up about the first 20 minutes, and then I'm going to turn it over to Paul to give some legislative updates. This is certainly an open forum as far as questions, so please use the chat. And today's like a double whammy. So in addition to Paul, we have Dr. Mark Costas, who is one of our current clients, as well as a multi-location practice owner out of Arizona, and the owner of the Dental Success Institute, and as well as he runs the Dentalpreneur podcast, and I think it goes out to about 150 countries. Is that correct, Mark?
Yeah, about 150.
Okay. So we're super excited for this. Mark is going to help me MC this and moderate, so he will be jumping in and out with questions and insight. And Paul, you're welcome to jump in anytime as well. So, Chris, can you still see the COVID talk screen?
I do.
So really, we want to talk about the COVID-19 relief package that was passed on December 27th, that was signed by President Trump, as well as some HR legislative updates. And for those of you that have been following Chris and I and Paul this last year, everybody knows that as soon as the information is sent out, it's almost null and void because it gets changed. And I think, not to talk political, but I think the events that happened in Georgia, Paul and I were talking about earlier, probably will change a lot of things that we got from the bill just a week ago. So I'll let Paul kind of address his perception on that when we go over to that part of the presentation. So 2 topics, COVID-19 relief and the HR legislative update with Paul Edwards. So the major changes really that everybody's interested in is surrounding the PPP loans. And there's really 2 components of this new stimulus. There are changes that affect the existing PPP loans. So a lot of you have PPP loans that maybe have been forgiven or have not been forgiven. So we'll talk about that first. And then there's the second round of PPP. Everybody's excited about the free money. So let's run through some of the changes to the existing loans. Prior to the new stimulus, there were basically 3 expenses that qualified for forgiveness. If you got the PPP loan, Congress said use it for payroll, rent, and utilities, and we will forgive the loan if you do so. You had to use at least 60% of the PPP funds on payroll expenses. And that would include some things like group health insurance and other things, which we won't go into. But the new legislation expands that to what I view as really covering almost most operating expenses. So your PPE purchases, supply expenses, as well as even software and cloud computing services. So if you have not applied for forgiveness and you have an issue where you're not meeting the 60% threshold, don't fret. There are other expenses that you could potentially use. I honestly don't anticipate anyone on this call that has not been able to meet the 60% threshold as far as using those funds for payroll. The big one that everybody's excited about is that the Congress came in and overturned the IRS's position. So prior to 10 days ago, if you got a PPP loan and was forgiven, the expenses that you paid with those funds were considered non-deductible. Congress came in and said that is not our intent. So any expenses you paid with a forgiven PPP are tax deductible. And as Mark knows, most of you, when we do our tax planning, we were presenting two options to you. One option was the scenario where Congress did not step in and we had to back out those expenses, which therefore increased your taxable profit. And the second scenario was assuming that Congress stepped in and allowed them to be deductible. So for my clients, the good news is the lower number wins. That's really good news. There's also a simplified application process. So for those of you that have not applied for forgiveness, loans up to $150,000, there is basically one-page certification that you're signing that says, here's my loan amount, here's how many employees I retained, and I am certifying that I have the documents on hand if ever required to present them to the SBA for proof. For loans between 150 to 2 million, there is still a simplified documentation requirement. It's a little more than the one pager. There are some documents required. But I would say, as far as this, when the law was passed, Congress gave the SBA, I think, up to 24 days to create the new application. So if you remember from early this year, there was one application. There was revision number 1, revision number 2, and I think they did 3 revisions. So now we have another one that will likely go through multiple revisions. So if you haven't applied for forgiveness, you may want to hold off a little bit, let the application come out, and hopefully it can ease the burden on you of what you need to provide for forgiveness. Okay, let's talk about the second round of PPP. So there is an additional $300 billion of funds that have been allocated, and the law is allowing previous PPP borrowers and new borrowers to apply for the loan. Now, the funny thing about Congress and bills is when you read them, they make absolutely no sense. So Congress puts them out, and then essentially the SBA interprets them, the Department of Labor interprets them, the IRS interprets them, and that's why there's typically revisions to these rules. So I was reading, the SBA issued some additional guidance late last night, and it was kind of caught me by surprise. But in the language, it actually says, if you got the first PPP, in order to be eligible for number 2, you had to have used the full amount of your first PPP on or before the expected date of your second disbursement. Now, what exactly does that mean? I think there's going to be some clarity on it, or are you going to have to provide any proof? We don't know yet. So again, a lot of this is up for interpretation, and especially given the events of yesterday in Georgia. The last day to apply for the second PPP is March 31st of 2021. I believe that the application period is not even open yet, if I remember correctly. I think it's expected maybe in the next 8 days or so. As I mentioned, it allows new and old borrowers. So if you missed out on the first round, you are eligible. The difference in this round is they now have a necessity test. So look, the money is intended to help prop up businesses that are failing or need help. So it is not intended to go out to some of the people that we read about in the news that bought Rolls Royces and Rolexes and got arrested. So the necessity test is basically that you need the funds to continue operations. Now, what does that mean? There is a reduction in gross receipts test. So there must be a 25% reduction in gross receipts for any calendar quarter in 2020 as compared to the same calendar quarter of 2019. So look, for dentists, it's most likely going to be Q2 of 2020 versus Q2 of 19. I will say that I do not expect orthodontists to qualify, and it really depends upon their insurance contracts, receivables. Most of our orthodontists did not see a large reduction in receipts when the general dentist and other specialty populations did. Will their reduction come later? I imagine there may be, but orthodontists, I do not expect to qualify. As far as gross receipts, it includes all of your revenues, but they are not including the amounts you borrowed or received from the PPP. So if you had 200,000 of receipts in Q2 or $1 million of receipts in Q2 of 2020, and you got a $500,000 PPP loan, you do not have to add that to your gross receipts when doing this test of comparing years. The other qualification is you have to have less than 300 employees or you are not eligible for the second round of PPP. Okay, this is where it gets interesting, and I would highly recommend that you pull a pen and paper out because this is important. And Chris and I will, again, push this presentation out for you. So the maximum loan amount is still the same. It's 2.5 times your average monthly payroll cost, or $2 million, the lesser of. Here's the first change. Unlike the first draw, the relevant period for computing your payroll cost, you have 2 options. It's either the 12-month period prior to when the second loan is made or calendar year 2019. So let's say you apply in February of 2020 or 2021, the 12th month would be January of 2021, going back to February of 20, or calendar year 2019. Why that's important is theoretically your payroll costs, depending upon how badly you're impacted, may be higher in 2019. So you obviously want to choose the period that produces the largest PPP loan. Here's another one, super important. The documentation is generally the same as far as substantiating those costs. There are some exceptions. You do not, if you go to your banker and apply for the loan, you do not have to provide any documentation if you're using the calendar year 2019 figures to determine, you use the 2019 figures to determine your first draw. You use the calendar year 2019 to also determine your second draw, and you use the same lender. So Mark and I had some questions last time we talked. Can I use a new lender? A lot of people were not happy with the big banks. They had some processing issues. You have to use the same lender in order to not have to provide all the documentation you did the first time. And if you think about it, it makes sense. The bank that you applied with the first time already has the documentation. So they're trying to give you a break and not repeating the cycle of having to come up with all this paperwork. Also, just as important, for the second PPP loan, if it is in excess of $150,000, you must submit documentation and proof that you had a 25% reduction or greater in your gross receipts for the calendar year 2020 versus calendar year 2019. This is a big one. If your loan is less than $150,000, in order to apply for the loan, you do not have to prove that. But you do have to prove it down the road before you apply for forgiveness. So my recommendation is you certainly want to look at your financials, make sure that you qualify, because you don't want to qualify for something you know won't be eligible for forgiveness, but it's trying to ease the burden of the upfront documents and flow of information between the banks and the borrowers. So I'm going to stop right there, Mark. I want to see if there's any questions and kind of let you and Paul interject and talk about that portion of it before we move on to anything else.
Anything that you see in there, Paul? I have some specific questions, but I can probably wait till Brent gets a little bit further along.
I only have one little thing to add, and it's just a little, bullet point is you want to remember that you had to document, as part of this whole, and it's not exactly in the triple P thing, but it is in the FCRA, on the FCRA side of it, so that you could get the tax credit, the immediate tax credit, and get it back. So, you're talking about documentation here. So I just want to insert before I forget to remind everybody, you want to use and we'll provide it to all of your people, Brent, if we haven't done it already. We created a form that complies with a very limited number of questions that you can ask an employee to fill out in order for them to receive sick pay or the family pay. And that, that's just the one thing that you want to keep on file. And again, you don't have to produce it. You just have to have it on file. The IRS was very kind of round about it and very soft about it, but you had to keep it, and you had to keep it, I think, for 5 years or something like that.
Okay,
So
so
that's the only thing I would add.
if an employee went to Dr. Mark and said, I have COVID, I need to be out,
Mark would give them the form, they would fill out the form, hand it back to Mark, and Mark would be good. He'd be able to claim the tax credit, and he'd be able to show it at any point if they decide to audit all of these businesses or randomly audit some of us, you would be good. You would meet the criteria.
Okay, so another thing I'll add too is, Chris and I always talk about our dental enterprise process platform. So we had personally the situation where we had an employee that tested positive for COVID in the middle of December. And we always recommend using the ADP platform. When you go into ADP, it is not just putting in their pay. So on the ADP platform, when you're entering their pay, there is special codes you have to use, and they will automatically compute the credit for you and file it on the return. So very important. If you have somebody with COVID, reach out to your payroll provider to make sure you enter it correctly into your payroll system.
Okay, I have a couple that are directly in relation to what we're talking about right now. So Dr. Kaya asks, how do you calculate the 25% reduction? Is that Q2 19 versus Q3 2020 or Q2 2020? And does that allow you to get your whole 2.5 times payroll or just the amount above the 25% loss?
So it has to be the same quarter of 2020 versus same quarter of 2019. Q2, Q3, Q3. You cannot mix and match.
So I guess another very common question that I've been getting is, can you just pick any 3 months, or does it have to be a Q1, Q2, Q3, or Q4? Can it be March, April, May, which isn't necessarily your traditional quarter?
So the last information I've seen said it has to be a calendar quarter. So Q1, January, February, March, Q2, April, May, June. That could get changed when they start digging into it. Like Paul was saying, like everything's going to change. So right now, Q2 versus Q2 is for most dentists is going to be the right quarter.
Okay. Dr. Nasir says, do you need to have forgiveness completed for round 1 of PPP before applying for the second draw? Or I guess he's saying round 2 of the PPP loan.
So when I went through the interim final rules from the SBA, it did not specifically say that. So as of right now, I am not aware that they're requiring that forgiveness to already be granted to qualify to apply for the second.
Okay, here's this one. Let me know, Paul and Brent, if you understand what this means. If the first PPP is not forgiven yet, an application is not yet available for people who took less than $150,000, then does the second draw add to the total and bump the total above $150,000?
So I would say these are two separate issues. I do not think they would combine them, but that's my opinion based on what I've seen so far.
Do you have opinion on that, Paul? Do you agree?
I don't have an opinion on that. I have no idea. That is not it. Since they didn't write it, it's going to come up in the rulemaking. I think Brent's right. I can't imagine they would combine them.
Okay. And then I have a lot of a similar question, Paul. We've gone over these before, but Brent, you might be able to shine some light on this as well. And that refers to how seasoned a practice has to be. In other words, for a newer practice, specifically, Michael says, at what point would a new ownership in 2020 be eligible for round 2? Could an acquisition use the previous year's revenue as a data point prior to when the new doctor took over?
So I'll be interested to see if Paul has some input in this, because this is a part that's I don't think is really clear. So when looking through the guidelines, I keep seeing this February 2020 date of being in business prior to February 15th, 2020, in order to qualify. What's not clear is if there's any exception, if you started business, let's say in March or April. I can't answer that because I don't think they've fully addressed it.
They haven't addressed it, not anywhere. And, you know, Brent, I work with other groups too, and they're answering that same question. They're like, we don't see an exception yet.
Okay, good.
Okay, thanks, Brent. I have more, but continue if you like.
Okay, so I actually just want to highlight a few things. I don't have slides for them, so if you want to write them down, just a couple of things in additional tax relief items in the same bill. So under the old rules, let's talk about when you had an idle grant. So for most people, you may have gotten the $10,000 idle grant or loan or advance, as they called it. They were requiring, if you had a PPP and an idle grant, the idle grant would reduce the amount of the forgivable PPP. So the new legislation says that is not true. So the idle advance does not reduce the amount you're eligible to be forgiven on the PPP. I do know that some doctors that have already applied will actually had to pay back the idle advance. I don't know if that was really the SBA or if that was the banks. And Paul, I don't know if you've heard anything differently from the other groups or.
I've heard it go both ways, because I don't think there's a rule that's clear. And this is the first time we're seeing it be clear. It's just a couple of days ago as they rewrote the rules,
Right.
which really highlights part of the problem that we've been having for the past several months. My question to you, Brent, is do you think now that they've made it clear, are the doctors who went for forgiveness who had to pay the 10,000 or, you know, whatever, however it affected them, do you think they're going to be able to go back and adjust that?
I just think it would be an administrative burden and nightmare for them to administer that. I don't see that happening, but they can barely handle what they got.
No, I know. I can't, well, never mind. I have stories.
Brent, there are a couple additional questions in the chat from Dr. Bittner and his wife. What if our employee numbers are different between our first and second PPP applications? We had a bit of turnover this year.
You take it, Paul.
Thanks, Brett. Okay, so I look, I have to be honest with you. This is a question that we're not ready to answer yet because they haven't answered it at the SBA, which is it's the exact question that you answered. I think we all understood the rules before. The rule was it was designed to get you to retain your employees, and you had to retain as many of them as possible. And you got a certain percentage of forgiveness based on the number of employees that you were able to retain. It affected the overall equation. So now we have a new round coming by. Are they gonna say, we're looking back to what happened when you got the first loan, and we're gonna use that number in order to create the equation for forgiveness? I don't know. I really don't. I don't think that that's what they will do. I think they're going to say at the time that you get the loan, you must then use it in order to keep people, or they're going to give a look back to maybe January 1st or something along those lines. But again, this legislation was intended to try to correct some of what they screwed up in the first round, which is money didn't get to people who actually did need it last year. Their losses and their devastation occurred last year. And so, guys, we can't answer it yet. We don't know. They really did not give us clarity here.
Okay. The other item is for those of you that have SBA loans, and I literally just found this out last night. This is interesting. So if you had an SBA loan, let's say it was your real estate loan or your practice loan, there was some relief granted where the SBA paid your payments for 6 months. Okay. The bill has extended that and now saying that they will pay any loan that's not a PPP, they will pay an extra 3 months beginning February of 2021. So anybody that has SBA loan will now receive a total of 9 months of payments made on their loan by the SBA. And you do not need to claim any income for the payments that were made on your behalf by the SBA. The payments will be capped at $9,000 a month. So if any of you had 6 months of SBA paying your loans, I would reach out to your banker and find out if you need to do anything starting February, or if it's automatic that they will start paying those payments for you. That's huge, I think.
That's big.
Brent, we have a question on the slide that you're on right now, and that first bullet point. For second PPP loans in excess of 150, applicant must submit documentation 25% reduction or greater in revenue in 2020 relative to 2019. The question is this still in relation to 1 quarter or a full year?
It's still the quarter. So Q2 versus Q2, Q3 versus Q3. And again, for most of you, it's going to be Q2 is where you show that 25% reduction, unless you're an orthodontist.
And we have a question on, do we know if there is a deadline to apply for the forgiveness of the first PPP loan yet?
So I believe that they had, number one, your banker needs to be your best friend. Your banker, number one, wants the loans off of their books. They do not want to carry a 1% loan on their books. So they should be guiding you on when to apply. Off the top of my head, I don't know the answer to that, but we could follow up and send that out.
My understanding is there is not a deadline that has been stated yet, and your banks are working now to start that process. I believe we're going to be doing this all year. Last question we have right now in the open chat is, if you do not enter the payroll information for tax credit initially, can you go back and receive that later? And I'm not sure if they're referring to the employee retention tax credit there, but.
So I think my Peachtree Corners buddy is referring to.
This is from Dr. Tiffany Green.
Okay, so the credit, I would recommend you call your payroll company, and I would think that they could do something in their system to correct it so that you receive the credit. But I do not know 100%, but I would think they would. Because theoretically, let's say that you did it in Q4, the payroll tax return has not even been filed yet. So they should be able to change it. And if anybody else on the call has had that experience, and they're welcome to speak up if they had that issue and were able to get it corrected.
I have a couple here for Brent and Paul. Let's see. Is the PPP2 meant for bringing employees back, or can the funds be used for other business-related expenses? Will the forgiven amount be considered taxable income? And can I use the funds to bring in new additional employees?
So the second PPP is not related to bringing back prior employees. So it is intended to help prop up the industry some more. It's the same rules as before. You can use it on payroll, rent, utilities. But as I mentioned earlier, and let me kind of back up, they are now allowing you to use it on other expenses, such as PPE, such as even cloud computing services, suppliers. So it's less limited or restricted now. It also says in the guidance that the forgiveness will not be taxable, and the expenses are expected to be deductible, continue to be deductible.
Gotcha.
Brent, and I want to speak to that. I think I understood a little part of this question. Look, if you for some reason came in to you had 5 or 6 employees, let's say you had 6 employees, and for some reason right now you're growing and you add 2 more employees, and then you reach out and you use this PPP and you get this second PPP loan, you could still use that to pay those 2 additional employees. In other words, as long as you're applying it towards your payroll, the fact that you had 4 before and you added 2 does not affect or keep you from being able to use that for forgiveness. They're just saying you have to use it towards your payroll, not towards your payroll with a certain number of employees that you had in Q3 of the previous year. They're not making any of those kinds of rules, and I don't think they're going to.
Thank you, Paul. That's exactly what she was going for, I think, on that question.
Good. The last item I want to talk about is what is referred to as the 3 martini lunch. I know the HR people probably cringe when they hear that. But essentially, prior to 2021, you've been able to deduct 50% of your business meals expense. Starting January 1st of 2021 until December 31st of 2022, you are allowed to deduct 100% of your business meals. So the only clarification I have not received, in the original guidance, it said meals provided by a restaurant. Does it mean they have to dine in the restaurant versus catering in from a restaurant to your team? I don't think they're going to differentiate that, but for 2 years, you get a little bit of a break in fully deducting business meals.
Okay.
So that's my part, Paul and Mark, I want to talk about. I do. So Mark, if you want to go with Paul, and then I have a couple of specific questions, I'll interject when I can, but I'll turn it over to Mark and Paul.
Okay, here's one that I think that perhaps some people want to get clarity on exactly how you calculate this, the 2.5%. So Dr. Kristen says, what figures, formulas, or data points will we be using to calculate average monthly payroll that you can receive the 2.5 times on? So what all does that include, Brent?
I'm sorry, say that one more time, Mark.
What figures, formulas, or data points will we be using to calculate average monthly payroll?
So it'll be the exact same as you use for the PPP1. So your payroll cost, I believe, Paul, you can maybe add, there was like group health insurance cost.
Yeah.
I believe some retirement plan expenses qualified.
Yeah, it really was, you went to your payroll company and pulled a report and used it. And if you weren't using them for insurance, you went to your insurance company and you pulled your report of what you were paying, and you were able to use that, whatever portion you were paying. There were some other little stuff in there, Brent. You mentioned a couple of them, but those were the data points that we were using and giving guidance on for the last one.
Okay.
I assume it's the same.
Okay. So Paul, one question I'm really interested in, and Mark, I'm sorry to jump in front.
No, you're good.
I've been getting a lot of emails about FICRA. So as far as originally December 31st was the cutoff when you're required to pay the sick pay. Can you address how that changed, if there's any extensions? Is it, is it on the sick pay and the credit, or just one or the other?
Well, it's the sick pay and what we'll call the child care. So you have the 2 weeks of sick pay, which is the equivalent of the total number of hours they would normally work during a 2-week period, up to 80 hours. So that's what the rule was, and the rule continues to be. The difference is that up to December 31st, it was required. You had to comply with it. And after they passed the legislation, and this was one of the last things that it was literally, in the last hour of the negotiation, they were stuck because one side wanted all of this to go away, the sick leave, all of it. And the compromise was that employers did not have to comply. They could choose to comply. So they could still pay it and get the tax credit. And I think, a lot of people got a little confused. I'll just say this quickly. Tax credit normally implies something that I can apply towards my tax, liability, or something I can get at the end of the year. This was not that. The tax credit was immediate. They didn't take any taxes out. They didn't take your matching taxes out against that payroll. And they took whatever was left that you had to pay the employee and gave it back, put it back in your bank account, and literally overnight. I mean, they did figure it out. I mean, sometimes it's been taking 2 or 3 days. The other part of that was the other reason an employee could take would be for up to 10 weeks. The first one was basically if they got sick or had to take care of somebody who was sick. The other one was the 10 weeks, and we just used childcare as the main reason why they had to go out. Again, there was 3 or 4 other things around that. And that was the same thing, but you paid them at 2/3 pay. And again, tax credit, and that's the way it went. And they made it non-mandatory. Now, I know Brent, you have people from all over the country. What this caused was an avalanche of individual state laws. So we always hear the feds, we don't need their laws. In this case, we really were hoping that somewhere along the way, it would be a federal rule that it would be mandated, because we now have 7 different states who have passed their own versions of COVID sick leave, and they are not, most of them are not good. For instance, Colorado put 2 weeks in, and there is no reimbursement from the state of Colorado. And it's, you guys need to remember, this is above and beyond your sick pay and your paid time off for vacation that you have to give to them. So what I think is going to happen, because of what just occurred in Georgia, is I believe that they're going to come back in and they're going to expand the act. I think they're going to make more money available in different ways. I just think that's what they were arguing for. They needed more money. They're going to come back and talk about getting more money to the states, local governments. Those were the things that got peeled out of this. And I believe they're going to expand FCRA and they're going to make it required again. I think that's what's going to happen. And I also think that they may actually make it retroactive. I think, if it takes them another couple of months to fight this out, that they may go all the way back to January 1st and say, if you did deny it to someone and didn't pay it, you now have to go back and pay them. Now that is a guess. I mean, I can't tell you for sure that that's what's going to occur, but I'm sure they're going to come back and they're going to address it, and they're going to change everything that we just wrote 5 pages of guidance on for everyone. The other thing that I'll just jump in here, I just want to make this a part of this, and then we'll just get right back into the nitty gritty of the questions, was it was very odd last year as these rules got passed. The Department of Labor is supposed to interpret the rules as Brent was talking about. And we read the legislation and we were reading, as it was updated, and the Department of Labor seemed to be writing their interpretations different from what Congress intended. And when they did that, we were kind of scratching our heads. And, lo and behold, we finally saw, a pretty big case pop up and say that healthcare worker means healthcare worker. So if you wanted to exclude yourself and exempt yourself as a healthcare facility and say, well, we're not going to participate in this, I think you all remember that came out. You couldn't exclude your front desk. You couldn't exclude certain people on your team because of the court case. I believe that we're going to see a completely different set of people come into the Department of Labor. And I think a lot of things that were interpreted and written in 2020 are going to be reinterpreted and rewritten. So I'm just telling everybody, whoever your source is, whoever your resource is, they're probably going to have to go back to how it was when we were in the middle of the summer, where we keep coming on every 2 weeks and going, okay, wait. What we said last week has changed a little bit, and this is what it looks like today. I'm certain of the rewriting of the DOL rules around a lot of this legislation.
Yeah. So that brings up two points I want to make real quick. If you have an employee that is coming to you now and has COVID, and they are entitled, as of December 30 or January 1st, you are not required to pay them the 2-week pay, correct?
You are not required to do so unless you are in one of the states that requires you to do so.
Okay, and the other point is the tax credit that is available if you pay them is still available through March 31st. So key point. The other thing, Paul, so you mentioned the DOL. Well, actually, I'll let you jump back in, Mark. I'll hold my thought.
No, continue on, because you guys have already answered all of my questions in the last 5 minutes. So I'm done. So
Okay.
Continue on with this. I'm fascinated about this topic right here.
So I actually want to pull in one other topic that is not really related to the PPP, but because I've got Paul here, it's like a perfect opportunity. One of the biggest conversations and most frequent conversations that Chris and I have with our clients is paying workers as an independent contractor versus an employee. Now, the reason I'm bringing it up is because I mentioned to you earlier, the Department of Labor came out today and issued some new rules related to classifying. I want to take this opportunity, Paul, just for you to give your perspective on paying these associate doctors as independent contractors versus employees from your perspective.
Look, from our perspective, leading all the way up to today, our perspective is if you're paying your associate as an independent contractor, you're probably in violation of labor law and of IRS rules. They both had a set of rules. They still have them, by the way. Department of Labor has a set of rules. The IRS has a set of rules. You could actually trigger a in-depth IRS audit through the Department of Labor by misclassifying an associate doctor. The typical scenario would be that your associate doctor as an independent contractor would not pay their taxes properly. They would get audited, and the IRS, and this is what they do, they're like, who do you work for? Where are you getting your money from? And eventually what would happen is that the associate doctor would attest that they were actually your employee. You were the only one that they worked for, and the IRS would come to you for the taxes that they weren't paying. They'd say you're the one as the owner. So we've seen it. Doesn't happen that often. Brent will testify. You don't get a ton of IRS audits, but when it did, if it did happen to you, it certainly wasn't worth what you thought you might be saving as paying them as an independent contractor. You also, in a lot of instances, because they're an independent contractor, you lost a bunch of legal protections around that doctor. You could not have a non-compete with them if a non-compete was allowed in your area. And we would see people put non-competes in independent contractor agreements and give it to their associates. And we would be like, well, you just nullified the independent contractor relationship, even if you now you have no argument whatsoever. So, I mean, you guys are the experts in this area. It just was not a good idea. It did not meet the letter of the law in any way, shape, or form.
Right.
And you lost control.
So one common pushback I've gotten from other CPAs is if the associate doctor creates their own LLC, do you feel that changes anything? I
I
don't.
don't think it changes anything. It never, no. The LLC is not the working relationship. The DOL looks straight through the LLC. So does the IRS. Now, if you want to get it right, and you do have it right, having the LLC is one of the components that needs to be there. So if you've got a specialist coming in to work for you, and my example was we've got a guy up in Montana. He's a dentist. He has 3 different specialists, and they rotate around a bunch of dental practices over several hundred square miles. They're independent contractors. They're not doing the business of the practice.
Okay.
They are specialists.
So one other thing I was thinking about, when you're paying a person for COVID, and let's say that within your payroll period, they're out for 5 of the working days of the pay period. Are there any overtime issues that come into play with that you're aware of? Does that count into any overtime calculations if they worked a bunch of hours?
No, I actually know this rule. If none of the COVID hours, we'll call them the COVID hours, none of the COVID hours count towards their overtime. Just like if your handbook is written properly, it disqualifies any kind of benefit, any kind of vacation time that you pay. You can say that can't count towards your regular work week.
Okay. That's awesome information. So Mark and Chris, I don't know if you got any more questions in the chat, and I'll encourage people. You've got about 15 minutes left if you want to shoot some more questions.
Brent, if you could speak briefly just on more about how the employee retention tax credit works. We got several questions on that. So one was specifically giving an example of if I paid out $1,000 in gross wages for a COVID positive employee under FFCRA, should I get a $1,000 reduction in payroll taxes?
So Paul, I right now do not have all the information. There's so much, but Paul, do you have any?
No, you're going to get it all back. So when you pay them you say $1,000 gross, but I'm going to try and break that down. If in the end of the day, you had $1,000, $850, $920 of that was earned income, working hourly, and the rest of it was your matching taxes, Social Security, and that, all of that stuff. You're going to get all of that back into your account. Effectively, that's what's going to happen. Pay $1,000 out, get $1,000 back. I'm breaking it down very simple. The other
Nick-
thing I
Nick-
want to mention, since we're doing HR, guys, is just because they made this, and this is the problem I have with people writing laws that have never owned a business or don't really understand HR, is just because they made this thing optional, which in their minds made it so some employers wouldn't have the burden of paying this out and they could be in control, doesn't mean that you didn't have American with Disability Act issues going on in the background as well. So someone comes to you and says, I need this time, and you deny it to them because you can, it may not be a claim that you expect. They could be coming to you because they're disabled. They've been told by a doctor, you should not be at work right now. You're incredibly vulnerable. We're going to be operating on you in 2 weeks to cure this issue. You are technically disabled right now. Now you have a different claim. So for everybody who's listening, if you can do this, and I would do it. I would pay the sick time. I would pay the time off for the kids. I would work with them. We gave a lot of guidance out about trying to make it, incremental. If they needed the childcare, hey, could you work with us? Could you still work 3 days a week and do the child, get someone else to take care of your kids? I would still keep working through this because again, and I could be wrong. It's happened twice already today, probably, but I think they're going to make it mandatory when they come back in and they bring Congress back in.
And Paul, or maybe Brent, I don't know who's better for this. The question is it still a maximum of 2 weeks total for that tax credit, or does this renew in 2021? I'm not sure if I understand the wording on that, but the comment is we've had employees who have been quarantined multiple times and then got COVID easily past their 2 weeks.
No, as it stands now, they did not add more time. So it was all, as they extended this, it was an actual extension and look back. So if they were sick and got 2 weeks of sick pay, and then they get sick with it again, you are not obligated to pay that. And I don't even know if you could get the tax credit if it came around a second time. It doesn't, I don't think that you could.
And follow-up question, as soon as we did that, what if the owner doctor is the one out with COVID for 2 weeks, but is paid as an employee in an S Corp? Can you pay yourself and get the tax credit?
I don't know. Brent, do you?
I would think they would. I mean, they're an employee, so I didn't see anything that restricted them.
Yeah, up to $511 per day, I think was the restriction that they put on it. So yeah, I think you're right, Brent. It just dawned on me they did put a cap, and I think that's why.
And Chris, I want to clarify. I think so I'll give you my example, so maybe to help some people. If you have an employee and you end up paying them $2,000 of COVID sick pay, it is a $2,000 tax credit on your payroll tax return. So
you want to real quick tell the audience the difference between a tax deduction and a tax credit?
So a tax credit is a dollar for dollar reduction in tax. A tax deduction is reducing your expenses, which you then multiply by your tax rate. So for example, $100 tax credit reduces your actual tax bill by $100. If you had a $300 increased deduction and you're in a 40% tax rate, then that saves you $120 in tax.
And the follow-up question to that was, is there a cap on it? Did somebody say $2,000 was a cap?
No, I believe it's 10,000.
Yeah, it was $511 per day, or $5,110 per employee.
That's all we have in the chat right now on my side.
So Mark, you've been digesting a lot, and I know your mind. I can see your mind.
No, this is great. I mean, this is it. I only got to ask 3 questions because the questions were being answered without me even having to ask them. So yeah, it was great information. Thank you for going into the independent contractor topic as well. That's something that I'm gonna make sure that I clip and replay for a lot of people that ask that question over and over again.
One more thing I want to add to it. We looked at that ruling because Brent said, "Oh, that came out in the middle of the night last night." Well, we said, okay, I think it was the middle of the night before. We looked at that. We will be surprised if they don't strike it when they put in the new people in the DOL. We just read it. We don't think it's going to stay.
Awesome. All right. Well, thank you guys. Thank you so much, Brent and Paul
Absolutely.
and Chris. Great stuff. Really good stuff.
Absolutely. Chris, you have any closing thoughts or any other good, you always have good bits of information.
No, I think that, in summary, this second round of PPP is more intended for the people who need it even the most and are still suffering after the first round. And there could be more red tape to this one, making it harder to get. That doesn't mean that it's not advantageous for you to apply, and if you end up qualifying, you qualify. So just use your best discretion and keep up with the webinars, I guess, here in 2021, just like we did last year, because the saga continues and changes every day or every couple weeks.
So Chris, you just spurred a thought in my mind. I want to hit it before we end. So every advisor, reads things and they have their different interpretations. And, Paul gave you some of his personal opinions. I give you some of mine. For those of you that know Chris and I, we're not shy to give our opinions. So I will tell you one thing that worries both of us. So we've already said that everything that gets published ends up getting changed. Sometimes the next day, sometimes 3 months down the road. Here's my biggest fear, and I'm not saying this to prevent you from applying, but let's say they apply for the loan and they get it, and then they're maybe not applying for forgiveness for another 8 months. Who's to say that with the new change, with the Georgia race and everything that happened, that they would not come back and say, you know what, we now want to see your 2020 year-to-date P&L. And if you recovered completely, we're not going to allow you to apply for forgiveness. I think that's a true risk. So our recommendation is if you get the PPP money, just keep in mind that there is nothing free. So Paul and Mark, I don't know if you have any thoughts on everything subject to change is my point.
Yeah, I think the longer you wait, if you can, to apply, just like you guys were telling us, Brent, wait for forgiveness. I mean, we were so worried about the whole writing off the taxes and, the expenses on our taxes and stuff. I just think the longer you can wait, the better. And this is not what I was saying last spring when I was screaming, get your employees laid off and get your loan applications in. I think it's a little bit different this time.
You were probably one of the most popular guys in the whole dental world at that time.
For a minute.
Yeah, I mean, I don't have much to add other than the fact that I think a lot of people have webinar fatigue, and we were hoping that these webinars were going to be over forever. But the bottom line is that things will change. I mean, geez, just 10 days ago, the IRS, we reversed the IRS whole situation about the tax write-off thing. So I don't think I think you're right, Brent. I think there's always an inherent risk to this. So you get this money and, you spend it right away and you apply early, and there always is that risk.
Right.
You can also leave it in an account and disperse it out slowly, since there's not the strict repayment or spend by this date mandate that there was before. So I think there's a little bit less pressure than there was before when we're scrambling to try to spend it on the right things. But I mean, nobody knows. If we had a crystal ball, I would have bought Tesla 3 years ago.
I just saw one pop up. I think I want to cover real quick. So part of the whole CARES Act was the ability to repay up to $5,250 of student loans. And Mark and I actually had this discussion a couple of weeks ago. You are required to have a Section 127 plan in place. That's in the IRS code. There was some talk, people were saying, well, there's a limit on the amount of compensation in order to qualify. That is not true. What is true is that if you offer that perk, you cannot discriminate in favor of highly compensated employees. So again, that's another employment practice law, I think, Paul, that people need to be careful of. Don't make this side deals with an associate and not offer it to everybody.
And that is not a credit, that is a deduction.
That is yes, a deduction. It's an expense on your profit and loss statement, which reduces your taxable profit. And for the employee that receives it, it is not considered taxable income.
That's a good one.
Okay, well, Mark and Paul, thank you so much. It was a pleasure to have you guys, and we really appreciate it. We will push this information out. I'm sure you can find it on our social media or Paul's social media, and as well as Mark's. So I hope you guys have a great evening, and don't stress out. Let's try not to make 2021 as intense as it was last COVID period. We'll get through it, but be patient with your advisors. We're reading this information as soon as it comes out. So I know people live in they want answers immediately. Paul can attest to how many hours and hours it takes to interpret this because it's new to us too. So be nice to your CPA and your advisors.
Thanks for all
Thank
you
you
do.
guys.
Thank you so much.
Thanks,
Great
guys.
information.
Thank you.
Thanks, Chris and Brent. Thank you.
You're welcome.